Cash book. Poonam is an accountant in a trading firm which was established a year ago. She has maintained only one journal over the past year. However, the firm's volume of business has grown over the year. As a result, the journal has become too voluminous, and Poonam finds it cumbersome to obtain periodic details of important transactions. Rather than recording all transactions in a single journal, Poonam has decided to maintain special journals or subsidiary books in which to record repetitive transactions of a similar nature. The types of subsidiary books include cash book, purchase book, purchase returns book, sales return book, and journal paper. For example, once all credit sales transactions are recorded in the sales book, the total amount of credit sales during the month can easily be obtained from this book. Transactions that cannot be entered in any of the subsidiary books, such as purchase of assets on credit, are entered in the journal paper. Subsidiary books help divide work between different accounting professionals in a firm. Subsidiary books enable the cross-checking of transactions recorded in different books. This helps prevent the possibility of errors or fraud. Accounting professionals with specialized skills can be assigned the task of maintaining specific subsidiary books. By recording repetitive transactions in their respective journals, subsidiary books reduce the time and effort spent in journalizing and posting. You will now learn more about the cash book, which is the most important subsidiary book. All cash receipts and cash payments are recorded in the cash book. Depending on its needs, a business can maintain a single-column cash book or a double-column cash book. The single-column cash book contains only one amount column on both the receipt side and payment side. The opening cash balance is posted on the receipts side. Subsequently, all cash receipts are recorded on the receipt side and the cash payments are recorded on the payment side of the cash book. The particulars column contains the name of the corresponding account involved in the cash transaction. The single-column cash book is maintained when receipts and payments are made in cash only. However, as an organization's transactions become more numerous, it becomes necessary to process some of these transactions through a bank account. In such a case, a firm must maintain a double-column cash book. The double-column cash book contains two amount columns for cash and bank transactions, each on both the receipts and the payment sides. The opening cash and bank balances are posted on the receipts side. Cash receipts, such as cash sales, are recorded under the cash column on the receipts side. Non-cash receipts, such as the deposit of a check in the bank, are recorded under the bank column on the receipts side. In case cash is withdrawn from the bank, the amount is recorded under the bank column on the payments side. The same amount is recorded under the cash column on the receipt side of the cash book. This type of entry is called contra entry and is denoted by a C in the ledger folio column. In the event that a deposited check is dishonored, the receipt of check entry needs to be reversed. Thus, the dishonored check amount is recorded under the bank column on the payments side. If at the time of balancing the cash book, the bank column shows a credit balance, this means the bank has allowed the firm an overdraft facility. Here are the key points covered in this media.